The media are talking about it these days in this industry, and we have heard this word a lot these days.
Number one prop firm.
Prop firms.
Prop firms.
Prop firms. Prop firms.
Prop trading firms.
Started playing with their own cash, taking risks, and making some serious moves in the financial game. With computers getting smarter and faster, these firms became wizards of algorithms and high-frequency trading. But hold up. As much as they dazzled with success, there were whispers of shady practices. Some said they were manipulating markets, others accused them of playing dirty. And that's where the fortune or fraud debate began. Some see them as a pathway to immense wealth, while others raise eyebrows, questioning their legitimacy. Today, we're on a mission to unravel the hidden truths behind these financial powerhouses. Hello, Elliott Wave Adjust family. Welcome back to our channel. This is Abdallah Gol. Today, we're spilling the tea on proprietary trading firms. Are they your ticket to riches? Or is there a catch? Stick around as we break it down in a simple chat. Part 1. The evolutions of prop trading. Before we get fancy, let's go back to the basics. What are these proprietary trading firms, and why should we care? Let's keep it simple as we take a stroll through their history. Before we get on their history, what is proprietary trading firm? By definition, proprietary trading refers to a financial institution using its own capital, rather than client funds, to conduct financial transactions. Typically, traders' earnings at proprietary trading firms are based on their performance, and profits are split between the trader and the firm. All right, let's kick it off with a bit of history. Picture this. It's way back in the 20th century. The stock market is buzzing, and a bunch of finance-savvy folks decides to shake things up. These firms didn't start with a bang. Nope, they quietly began as in-house trading desks for big financial institutions. Their job? To trade with the company's money, not yours or mine. Fast forward to the 80s and 90s. These guys thought, hey, we're good at this. Why not do it for ourselves? And just like that, prop trading firms stepped into the spotlight. They started playing with their own cash, taking risks, and making some serious moves in the financial game. With computers getting smarter and faster, these firms became wizards of algorithms and high-frequency trading. But hold up. As much as they dazzled with success, there were whispers of shady practices. Some said they were manipulating markets, others accused them of playing dirty. And that's where the fortune or fraud debate began. So why should we care about their history? Because it sets the stage for what comes next. Are they the heroes of finance, or is there a twist in this tale? Stick around as we unravel the story of proprietary trading firms from humble beginnings to the controversial present. Proprietary trading firms, or prop trading firms, are a mysterious entity in the financial realm. Some see them as a pathway to immense wealth, while others raise eyebrows, questioning their legitimacy. Today, we're on a mission to unravel the hidden truths behind these financial powerhouses. Let's look back then, how they rise these prop trading firms. Proprietary trading firms, or prop trading, have become synonymous with the financial landscape. These firms use their own capital to trade financial instruments, promising substantial returns. But is this too good to be true? Part 2. Tricks they make within the trade. Now, let's talk strategies. These firms have some tricks up their sleeves, from computer stuff to fast trades. Are these tricks a win or a whoopsie? Let's find out. Many are drawn to prop trading firms by the allure of quick fortunes, high leverage, advanced algorithms, and cutting-edge technology. The perfect recipe for success, or is it? Let's uncover the strategies that make these firms seem like financial wizards. In my experience, most of prop firms trick traders in some of these steps. Step 1. Using specialized software to hinder profitable trading through delays and slippage. Slippage is when the price at which your order is executed does not match the price at which it was requested. This most generally happens in fast-moving, highly volatile markets, which are susceptible to quick and unexpected turns in a specific trend. Step 2. High leverage. Some prop firms offer high leverage ratios, allowing traders to control larger positions with a relatively small amount of capital. While this can amplify profits, it can also increase the risk of significant losses. Step 3. Unrealistic profit claims. Beware of prop firms that make unrealistic profit claims or guarantees. Trading involves inherent risks, and no firm or trader can guarantee consistent profits. Step 4. Misleading marketing. Be cautious of prop firms that use overly aggressive or misleading marketing tactics, such as promising guaranteed profits or downplaying the risks involved in trading. Part 3. Exploring the fortune side. Let's start with the positive side, the fortune. Many individuals have achieved remarkable success by joining prop trading firms. Let's see some of these traders. This is Pasquale. He is one of the most profitable traders in this space, and he took over $2.5 million in payouts across different prop firms. From turning a few $100s into thousands to gaining access to cutting-edge trading tools, these traders have found their fortune through prop trading firms. There are also other traders on Elliott Wave Adjust community who reach potential success in this space, and they make over 30% profit every year. But unfortunately, we were not able to interview them, but we will bring them here soon to share us their success stories. But hold up, you might be thinking that 30% is a big deal. I say to you, yes, 30% is a big deal. Let's assume your account is $100,000 and you generate 30% profit every year, which means you earn $30,000. It is not easy to make 2.5% profit every month in this Forex market. So you are a five-figure income trader. Enough with the fancy stuff. We're checking out real stories. Who hit the jackpot and how did they do it? Get ready for some real talk about making that moolah. Let's see another success story.
I just had to do it in sake of like positive reinforcement, because like my first profitable year like started that I made like 19%, like first 3 months were just like break even, which was great. Then I made like 19%, and then I still had like leaks in my system. So I started to lose. So I finished my first profitable year, and I'm a trader, I work with numbers, so I like to be exact about numbers, not to be vague about numbers. So my first profitable year ended at like 7 hour profit. So it wasn't like a rock star year, it wasn't just like, oh yeah, like give me millions, I'm ready. It was very subtle, this is how it was. It was just like 7%, but I was proud of it. I was proud of my mindset of even sticking to my rules, even when like, I was just like, so I made 19% at like 3 months in the spring of 2019. So I was just like, so that's 19 hours. So I was like, okay, so by the end of the year, like if I keep improving, I could be at 100% a year. I'm a rock star trader, and that didn't happen. Instead, it went lower and lower, and I needed more help. I needed to rebuild my system. So it wasn't like some graduation. There was no prize, there was no trophy, but I was celebrating it to reinforce my mindset that got me there, and that I didn't ruin the account after the strategy showed its like problems. I was really good with risk. So this was something like, so it wasn't like it was almost like a forced celebration. I don't want to say forced, but it's just like I have to celebrate what I can control.
Part 4. Exploring the another side. What about the darker side? Allegations of market manipulation, insider trading, and opaque practices have cast a shadow over prop trading firms. Are they playing by the rules, or is there a fraudulent underbelly we need to be aware of? The proprietary trading industry, like many financial sectors, has a darker side that potential traders and investors should be aware of. While not all prop firms engage in unethical or questionable practices, some have been associated with behaviors that can harm traders and tarnish the industry's reputation. Here are some aspects that represent the darker side of prop firms. 1. High pressure and toxic culture. Some prop firms create a high-pressure environment that can lead to excessive stress, burnout, and unhealthy competition among traders. This culture can prioritize short-term profits over long-term success and well-being, leading to poor decision-making and unethical behavior. 2. Exploitative contracts. Some prop firms offer traders exploitative contracts that heavily favor the firm over the individual trader. These contracts may include unfavorable profit-sharing arrangements, excessive fees, and restrictive terms that limit traders' ability to operate independently or profitably. 3. Lack of transparency and accountability. Certain prop firms operate with a lack of transparency, making it difficult for traders to understand the firm's operations, strategies, and financial health. This lack of transparency can lead to mistrust, misinformation, and potential fraud. So, while there are reputable and ethical prop firms in the proprietary trading industry, it's essential to be aware of the darker side and potential pitfalls associated with certain firms and practices. Traders and investors should conduct thorough due diligence, seek independent advice, and prioritize their financial and emotional well-being when engaging with prop firms or considering career opportunities in the industry. Oops. They did it again. This is what I have been warning you. Time for some drama. We're spilling the tea on scandals and oops moments in prop trading. Is it just a few bad apples, or is there a bigger problem? Let's dish.
It was an unjustified ban, but the reason for the ban was because I gamed their system. I went for a lot of challenges, I got the funding accounts. On the funding accounts, I was making 2-3% every single payout. So imagine on 1.2 billion, you're making 2-3% every 2 weeks, so that's like 5% a month. That's a lot of money, that's a lot of risk for a prop firm that doesn't even copy your trades. So just be aware of these scam companies. I went on a bit of a rant, but I wanted to expose the whole truth because I've heard a lot of messages, a lot of tweets saying about me, oh, he's gaming the system, he's using a HTF, he's using EAs, that's why he's getting banned and all of that. No, the reason I got banned on so many prop firms was because I understood how they operate and I understood how I can have an edge. Because imagine prop firms are like a casino, you just have to find a way to have a bit of an edge if you want to win. And my edge was having money, was having a bank, was having capital to deploy, to pass, to invest in challenges, to try to get funded, and then use those funding accounts to keep stacking payouts week after week, after week after week. That was my whole...
Of course, risk is part of the game. But it is very important to choose the right one. Decent prop firm who is capable enough even after you pass to give you funded account instead of claiming you were bridged the rules or something like that. Even though you didn't bridge anything, you know what I mean. I would recommend you, even if you pass the challenge and get funded, don't make over 10% profit a month, even if you can. Why am I saying that to you? When they see that you are doing a good percentage, they will blame on you that you have breached the rules like Andrew. The high percentage profits can often be associated with high-risk trading strategies. Prop firms don't like traders who make high percentage profits. We will make another video in that topic. It's crucial to hear both sides of the story. Some traders have faced unexpected hurdles, and we want to bring their experiences to light. Transparency is key, especially when it comes to your hard-earned money. Part 5. Regulation and Oversight. Hold on, we're not done. What about rules and big bosses keeping an eye? Let's break down the boring stuff in a simple way. Who's watching, and what are they looking for? To understand the full picture, we must scrutinize the regulatory landscape. How are prop trading firms regulated, and what oversight measures are in place to protect investors? Join us on this journey through the regulatory maze. Regulations governing proprietary trading firms vary by jurisdiction, but they generally aim to ensure market integrity, protect investors and traders, and maintain a stable financial system. Here's an overview of some common regulatory aspects and considerations for prop firms. The most important one is licensing and registration. In many jurisdictions, prop firms are required to register with relevant regulatory authorities and obtain necessary licenses to operate legally. Regulatory agencies such as the U.S. Securities and Exchange Commission, SEC, Commodity Futures Trading Commission, CFTC, Financial Conduct Authority, FCA in the UK, and other similar bodies oversee and supervise prop firms to ensure compliance with applicable laws and regulations. It's a big topic. We will try to make another video in that area. Part 6. Balancing Act. Risk versus Reward. Last but not least, let's talk about the balance. Is the money worth the risk, or is it a risky business that could leave you in the red? We're breaking it down in plain English. Investing hard-earned money in proprietary trading firms can be rewarding for investors who conduct thorough due diligence, assess the risks and rewards prudently, align their investment objectives with the firm's business model and performance, and maintain a diversified portfolio strategy. However, it's essential to exercise caution, remain vigilant, and prioritize capital preservation, risk management, transparency, and ethical conduct when considering investment opportunities in the prop trading industry. If you want to going down the prop firm's route, you have got to focus on the process of trading. You have got to understand how to trade properly. We all have winning trades. We all have losing trades. Trading is much more than that. It is about the process, about the psychology. So you need to get yourself educated, I think, before you waste any more money doing these challenges, some of which you pass, some of which you will fail. Get the education, treat this like a business. Whether it's your own funded account or whether it is a prop, it is still a business. If it's not, then why waste your time? As we conclude our journey into the hidden truth behind prop trading firms, one thing becomes clear. It's a complex landscape with both fortunes and pitfalls. The key is to navigate it wisely, understanding the risks and making informed decisions. Making money with prop firms is possible if you are a skilled and consistent trader with a proven strategy. But keep in mind that prop firms only fund a small percentage of traders. You need to meet their criteria and align with their trading style. And remember, evaluation is a two-way street. You need to assess whether your choice of prop firm is a sensible one and prudent for your long-term financial success. When evaluating the risk associated with trading with a prop trading firm, several key factors should be considered. These include the firm's regulatory status, track record, industry reputation, and level of transparency. Conduct thorough research on the firm's history, financial stability, risk management practices, as well as information about their CEO and founder. Additionally, be vigilant for any potential conflicts of interest. Seeking legal advice is advisable to gain a deeper understanding of the risks involved and to safeguard your interests. If you've enjoyed this open-eyed video, don't forget to give us a thumbs up, share your thoughts in the comments, and share this video with anyone interested in the world of finance. And of course, if you haven't already, hit that subscribe button and ring the bell for more money talks. Until next time, stay informed. Keep it real, trade smart, and happy trading.